Hi, and welcome to the Market Alert for Wednesday, the 27th of October 2021. So the long bond, big techs and black gold bid as China stocks puke. While the US tech stocks rally today, China tech actually puked harder after its recent dead cat bounce. So China's not even influencing the new all-time highs in the US markets. September new home sales explode higher. Medium home prices rose 18.7% year on year to 408,000. Blimey, that's serious. Futures surge to all-time high as earnings supercharged market melt up, because that's exactly what it is. There is a melt up. Parabolic is the word. Even though this has been a good earnings season in aggregate, we are starting to see more companies with supply backlogs, hiring difficulties, and rising input prices that are eating into profits. Yeah, it's just a slight delay on the hyperinflation. But don't worry, we're all going to be monitored and looked after in the future anyway, as public health or private wealth, how digital vaccine passports pave the way for unprecedented surveillance capitalism. That's the whole point of hijacking the COVID agenda by the elite. Health passports are a red herring. You could have hepatitis B or some other serious disease and still go into a nightclub if you've got a vaccination passport and spread that around. So it's got nothing to do with health, and anybody with half a brain cell can see this. Any other contagious disease that you may want to carry, but as long as you're double vaxxed, you can get into these places, but spread the other. The titans of global capitalism are exploiting the COVID-19 crisis to institute social credit-style digital ID systems across the West. I know it's got nothing to do with the markets, but it's time people woke up to what was actually going on with the Davos boys, and how they're actually using this for the green agenda and engineering and changing our lives, eventually ending up with a credit-style or Chinese credit-style social security system. That's where this ends, and a digital currency that is run by the central banks. That's why they keep dropping all of these hints and saying, "Oh no, we're not going to do it." Bank of England is already working on it, as is the US, and they wouldn't be surprised if there isn't a global cryptocurrency, to be perfectly honest with you. So here we go. Wednesday, we've got durable goods orders and annual budget release tentative. This is out, I think, at midday for the UK. This will be out before the the core durable goods. And then we've got crude oil at 3:30, which has already shown a bit of a inventory increase. They've got their 2 million barrels. So they've already released this overnight, which is a bit odd. But it's showing that there is a bit of a supply issue for crude oil, which doesn't stack up with the all-time highs for petrol prices here in the UK. But then nothing stacks up at the moment, does it? Especially when you look at the Dow chart and you see this sort of parabolic move to the upside, with the market making new all-time highs yesterday as well, even though there's some selling around as the market pushes up. Overnight, you can see that even though we've moved lower, we're now starting to move back to the upside. This is going to continue for the foreseeable, as we're in the earnings season anyway. They're just going to use that to move prices to the upside with the odd pullback. The madness continues, and you've just got to trade in the direction that the market is moving. It's exasperating to see that the fundamentals are completely disconnected from reality, but it is what it is. We know it's manipulated. You're better off making money on the upside than trying to short the downside at the moment, because you will get seriously burnt trying to do this. Yesterday, we saw the market move lower to begin with, then it moved up and then moved down, which is interesting to say the least, and then further down, but at the moment starting to move back up. Not a great move, actually. I mean, it's only a 150-point range, which is quite small for the Dow, as you can see in the daily chart. Tiny range for yesterday. It looks just more exaggerated in the 30-minute chart there. In the German DAX, we have the market moving up, also breaking through yesterday that 15,719, holding there at the moment overnight, and also taking out the 89% retracement as well. Sticky area, but we're nowhere near the all-time highs yet. Not that it would take a lot to actually bring the market up to the 16,000 level, which is where it would find some sort of resistance. But the DAX at the moment behind the curve as far as making new all-time highs, as opposed to the Dow, which is making them daily and overnight at the moment. So we're through that 15,719 is where the support is. If you have a look at the 30-minute chart yesterday, the market was doing absolutely nothing, and then it exploded to the upside, and then pulled back a bit, did a double top, and then just traded in a range where it has done all night. Come back to the DP, and now is moving higher off the DP. It needs to take out yesterday's high in order to continue the madness to the upside. In the 2-minute chart, here you can see that we started off with the market moving higher, then it hit some selling. But notice how the market sits at the 200 MA there. The other average is the 5 and the 20 coil, and then we see the market break out, and the average is split with the 5 accelerating away from the 20 bar moving average, and prices moving to the upside there by 80 points, and then also sideways retracing 78 and then going into a sideways move. In the afternoon the market was sideways, as you can see there, just stuck in a range. Very, very quiet afternoon. Meanwhile, in the metals, these are starting to look set for a correction, so let's mark up the downside, be prepared for it. So this is where I'm looking, prices coming back to the 22 area for silver. Given the opportunity, they will do this. At the moment, we're still currently above or just sitting at the $24 range, but expect a couple of dollars off this. They'll use it to their advantage if they're going to keep moving the market to the upside. Let me just put that back on. I shouldn't have removed that, so let's go from there to there. Yeah, the 62% retracement is an interesting area as well, because you've got the 50 bar moving average and the 20 bar at this level, but it's looking weak. I'm expecting a drop in this, a correction at this time. The 100 bar moving average is not is causing a resistance. The market can't seem to hold above this, or the 89% retracement from here to here. So again, expect some sort of retracement. There is another low here actually that spikes down, so you could use this one as the first area, and that would give you these other fibs here before we get into the lower set, and then of course would use this one back to here, or this one back to here as well. We can roll the fibs down as the market retraces there, but at the moment it's looking a bit weak, and the bankers will use this to their advantage. And we've got the dollar moving higher at the moment. See this yesterday, but looking a bit weakish overnight, but even so, you know, there's the 30-minute of the dollar. It's at the DP at the moment, finding a bit of support. Any spike to the upside will send the silver and the gold market, which you can see also a bit weaker at the moment, towards the downside there as well. So from here to here for the gold market there, the first set of fib retracements to the downside that you could expect for the price of gold. Okay, that's a quick roundup. Let's see what happens today with regards to the news and how they use it to continue the melt up in the market, which we're seeing at the moment. Okay, that's it for this one. If there is anything else to report, I'll let you know. Otherwise, as ever, thanks for watching. See you in the next one.